Shares of Reliance Industries Limited climbed over 1% on Monday to hit a fresh intraday record. The stock touched a high of 1,611.8 rupees, marking its strongest single-day move so far this year. But the rally was short-lived. On Tuesday, Reliance shares slumped over 5%, logging their steepest fall in more than 8 months to an intraday low of 1,496.3 rupees. The decline followed global brokerage CLSA dropping the stock from its India model portfolio. Even after the sharp correction, Reliance shares remain up around 26% over the past year. Analysts also continue to flag potential medium-term upside, citing expectations that a US takeover of Venezuela's oil industry could benefit Reliance Industries and ONGC. Now, before we understand why Reliance is in focus, let's pause for a short break. The rally follows analyst expectations that Reliance's oil-to-chemicals business could benefit from recent US action in Venezuela's oil sector. According to analysts at Jefferies, a potential US takeover of Venezuela's oil industry could lead to the easing or lifting of sanctions on Venezuelan crude. That could allow refiners like Reliance to source heavy crude at discounted rates relative to Brent, supporting higher refining margins. Last weekend, the US military carried out a major operation in Venezuela, capturing President Nicolas Maduro and bringing him to New York to face charges, including narco-terrorism and drug trafficking. The move has renewed global focus on Venezuela's oil sector, which has been constrained for years due to US sanctions. India was once a significant buyer of Venezuelan crude, especially in the 2000s and early 2010s. However, imports fell sharply after 2019 due to US sanctions. In FY25, India's total imports from Venezuela dropped to just $364.5 million, with crude oil accounting for $255.3 million, an over 80% decline from the previous year. Any easing of sanctions could reopen limited opportunities for Indian refiners. Market experts say stable global oil prices and improved crude supply could support higher refinery utilization for Reliance. Jefferies also noted that ONGC could benefit if it recovers over $500 million in unpaid dividends from its Venezuelan project following US intervention. Now, analysts believe any short-term dips in RIL shares could be seen as buying opportunities, while long-term investors may continue to hold the stock. That said, market participants are advised to closely track developments in Venezuela and global crude price trends. For more updates on markets and global energy shifts, follow our coverage.